Hi everyone, welcome to episode 2. I'm Dan and this is a review of mPhase Technologies, ticker XDSL. Let's get straight into the 7-point review process, starting with what do they do? So as I just mentioned, company name is mPhase Technologies. Location wise, they claim the headquarters are based in the US. However, after looking into their SEC filings, it appears most of their operations are run in India. They've been around since 1996. They have 107 employees according to their investor pack. They offer several products ranging from software as a service, learning and development, all the way through nano battery technology. At the time of doing this review, their share price is 39 cents, giving them a market cap of just under $30 million US. mPhase Technologies claim to be an AI-based technology company. They have 5 strands that fit under the parent company of mPhase: Learning Track, Close Comms, Travel Buddy, Alpha Predictions and Nano Battery. Critically, mPhase expects to have multiple revenue sources by the year end of 2020. Now if we take a look at the financials, now as when you're conducting any due diligence, you should really be looking into the financials. Numbers don't tend to lie. So I'm going to spend most of my time here looking through a few SEC filings and other sources of information which I think will help you make a decision on whether you should invest in mPhase Technologies. Personally, when conducting my own due diligence, I like to look in the SEC filings. You can see here that since the inception, they've had approximately $227 million worth of losses since 1996, and cannot be certain when or if we will ever be profitable. They go on to say that we've had net losses of $14 million and $2 million for the years ended June 30th, 2020 and 2029. Further adding, and this is a pretty scary one, if we are unable to achieve profitability, we may be unable to continue our operations. So the next point is, our independent registered public accounting firm has expressed substantial doubt about our ability to continue as a going concern, which may hinder our ability to obtain future financing. We will require additional financing in the future, so they're saying that they will need that, there's no doubt about it, in order to fund their operations, which may, and this is why you should be concerned, cause dilution to our existing stockholders or restrict our operations. So in short, what this is saying to me is they're looking to dilute again at some point in the future. They're going to need to raise capital, which means your share value will be devalued. We're not even that far into this review, and already there's more red flags than a matador's dressing room. The next point, we depend on one customer, and the loss of this customer would have a materially adverse effect on our business. They rely on one single customer based in India. We'll get into that a little bit later on, but these are massive red flags and you should be really concerned. It just goes to show you can't always trust what's in the investor presentation pack. So a shameless plug at this point, if you want to get deep dives done for you, please click subscribe. I'll do them for you. You just need to drop a comment below this video and I'll get round to reviewing companies that you want me to review. At this point, I think it's really important to say that whilst I'm building the channel, it'd be really easy just to do positive reviews about every single company. But that's not what I'm here for. I'm here to give you honest answers. The final point in the financial summary to kind of bring home and understand is, most people when they're plugging this stock, they rely on the nano battery tech, which they've been developing for around 10 years and it's never ever seen the light of market. And if you read in here, we may incur substantial expenditure in the future in order to protect our intellectual property. They don't have the money to do that. So that's the financials. Not a pretty picture, but let's look into the share structure and see if that tells us anything more about the company. Positively, no one's been selling, but equally no one's been buying. Now, if you're going to invest in a company, a really good signal is that people inside the company are buying in it because they believe in it and they can see the future roadmap and they want to invest in it. If we go down a little bit to the ownership breakdown, this tells quite a, for me, an alarming story. It's pretty much split 50-50 between general public ownership and individual insiders. And whilst you might say, Dan, what's the problem here? The problem is that no hedge funds, no private equity, no venture capitalists have skin in the game on this one. If they're not interested, why would you be? On the face of it, when you look at the top shareholders, it looks to me as though this company works for one person and one person only, and that's the CEO. Up until recently, he was also the CEO of Verus International Foods. I'll let you do your own research on that one. So the final point on the share front, which you should consider when trying to decide whether you should invest, is this. Mr. Bhatnagar, President and CEO, his base salary is $275,000 per annum. pretty good. And the bit that jumps out for me is this bit here. So he received 2.6 million restricted shares of the company's common stock. Do the maths on that. That is an incredible amount of money for a company that's only turning over 30 million US dollars. So bull case, I'm afraid in this scenario it's going to be fairly quick. I'll try and be fair all the time, but there's not really many shining lights here. They do have revenue and the total number of employees is increasing. They are expanding their operation as well. But is it really sustainable? And on the face of it, their market cap in relation to their annual turnover is brilliant. It's almost 1-to-1. The rest of the bull case, I'm a little bit at a loss with. If you think there's anything I've missed, please by all means put it into the comments and let me know. I'm always up for learning about the company, but on the face of it, if you are invested in this company, I do think you should check out the points that I've raised. In terms of the bull case, I wish there was more to be positive about. So let's get into the bear case. First of all, we've been through the finances, they were shocking. The shareholder split, equally pretty shocking as well. With zero institutional investment, surely that's raising concerns for you. It is for me. We're going to head back over now quickly to the SEC filing and just check out one thing around their property that I found. So when you consider that the company's been around since 1996, they've got 107 employees and they claim their headquarters is in the US. You'd expect their lease to be quite long and of a reasonable sized contract. Well, that's not the case. You can see here that the lease is on a month-to-month arrangement, and now in all fairness it is leased from Verus International, so there are some economies of scale there, but even still $1,350 a month and a month-to-month arrangement, it's not screaming to me that there's a lot of confidence there in the business. So further to the property issue, let's look a little bit further at their corporate strategy and the direction that they're going in. You can see that they've got 5 work streams or 5 revenue streams. Now, for me, their operating strategy is completely wild and it's out of control. Since their inception, they've had total losses of 227 million. I'm not sure how that has been sustained so far to this point, other than sheer detriment to their investors. And at what point as the CEO do you just think, let's just focus on one thing we're good at. We can reduce some headcount and we can regain some control of the business. For me, you're part of the battery tech, it's expensive and no one's interested in it. They've got patents. If people do become interested, then they can license it out. Equally, if you wanted to be really smart about it, you could sell off the battery tech for a lump sum, pay off some debt, and write into any agreement that you get a percentage of any future revenues. And the fact that they haven't done this makes me think there really isn't any potential in the battery technology that they have developed so far. Now, if we look on the mPhase Technologies website and scroll down on the About Us section and their people, let's do a little bit more of a deep dive. And the first person we're going to look at is Venkat Kodimudi. So it says here that Venkat most recently served as the practice lead for blockchain and intelligent automation for CGI, a global consulting company based out of Canada. If we hop over to LinkedIn, we can see Venkat here, and it appears as though he still works for CGI, taking on a new role in February 2021. Now, someone's not telling the truth here. Either Venkat is what I believe a consultant and he still works for CGI, or mPhase have been quite creative about who works for them. Just so you don't think I'm being biased, let's share the love out and go and check out a few more people. So now we're going to check out Ram Mantravadi, President. So when you consider that they're headquartered in the US, you'd expect someone of this role to be based at their headquarters. Let's go and check him out on LinkedIn. So now we're on LinkedIn looking at Ram's profile. He's based in India, which isn't really a problem, and he does work for mPhase. And if you're investing in mPhase and you think you're investing in a company based in the US, targeting the US and growing into the US, you might want to rethink it because it's clearly not where their head's at. They're actually targeting India, and that's where their single customer is at the moment. And don't get me wrong, India's a massive market, but I just find all the literature to be quite misleading. And the final person just to do a soft check on is Chris Cutchins. So here we are on LinkedIn. And if we scroll down, we can see that Chris, well, he works for Verus International. It always makes me slightly nervous when one person, or maybe 2 people, the CEO and Chris, are split across 2 companies. 2 companies that are doing equally as poor as each other. I don't know about you, but when I invest, I like the people that I invest in to be true and genuine. I'm not saying they're not, but when they're split across 2 companies that are equally doing as bad as each other, it does make you wonder. Generally, one of my main things that I check out when I'm investing is the people. What have they done in the past? Have they got results? Are they dedicated to one single focus and making sure that you get the best return possible on your money? And when I see the CFO and the CEO split across two failing companies, it does raise real genuine red flags for me. I'm not saying they're bad at their job, and I'm not saying they can't do it, but I think when you're trying to turn a company around, you need dedicated focus. And when you can't focus, it's extremely hard to achieve any level of success. And the final point in the bear case that I want to make is when you look at their revenue history, it's been flat, it's been next to nothing for a long time. 10 years under 2.5 million per annum. And then suddenly out of nowhere, 30 million pops up. Normally what you get as a growing business is sustained growth over time. So when you get 30 million popping up out of nowhere, doesn't it make you think, what's going on here? For me, it raised a red flag and I wanted to look into it further. So what did I find? Being totally honest here, I couldn't find who that single customer was. So there's 30 million generated via this arm of the business here. So Learning Track. And if we scroll down just a little bit, we get to the review section. What their happy clients say. Now I can't prove anything, but I think their client is Alpha Prediction. Now Alpha Prediction is part of the umbrella of mPhase Technologies. Now whilst I can't prove this, it would appear that if that's the case, that 30 million revenue generation is wooden dollars and it's been passed through. And you could say, great, at least they're generating some revenue. But actually that might not be the case. They might be selling this software as a part of a wider package and it could be heavily discounted. We just don't know. For me, the whole company just feels a little bit too shady. And it's not something I'd be recommending that you put your money in, or anywhere near for that matter. In fact, I'll be running the other way. Now, if you are interested in this stock, please don't let me be the one that puts you off. I'm just trying to present facts here. Now that I've done my best impression of Andrew Left of Shitron, let's move on to some technical analysis. As we can see here, the price is around 39 cents, and I've used the same instruments as I did last time. I've got the awesome oscillator and then the MACD, again with the 200 EMA and the 50 EMA line, and I've drawn some support lines as well. So back in December this was worth 5 cents a share, and they've seen some pretty drastic improvement throughout 2021. Now, in terms of the technicals, it looks pretty good. I mean, they're making the right steps up. If you're looking at the chart alone, you'd probably be investing, but let's try and dig deeper and understand exactly how it's got to this point. So first up, there's been quite a lot of momentum around penny stocks, which typically happens near the end of a bull run. You tend to get people removing money out of fundamentally good stocks and pumping the penny stocks. I'm not saying that all this is down to pumping. It clearly isn't, because you'd have a pretty steep drop off at some point. I think if you factor in the fact that they've had a $30 million contract, and on the face of it, they've got some quite attractive products. Nanotechnology for batteries, AI-driven technology as well. Those kind of technologies are in the buzz zone at the moment. So when did it really start taking off, and what do we want to look for here? Now, so in this zone here, and this massive green bar, is when it got listed on Trading 212, which opened it up to a massive amount of volume that it hadn't seen previously. Now it would appear, in and around this level here, that it's had some good support, and it's actually gone slightly back above. So in between these two zones here, it's had some good support, and it's crept just up above it. And you'd hope for the future, as a shareholder, that it would hold this line here. However, my concern is it will reach a point, and they do decide to dilute, and it will devalue your share price, and it will drop back down massively. I also think that with a big sell-off, it could gap down to around the 27 cents mark, something that you really want to be keeping an eye on. The awesome oscillator does suggest it's on an upward trend, which is good, and also the MACD suggests that the faster moving line has crossed over. It's on a positive uptrend, therefore technically this chart's actually in a pretty good position. This is why I think it's important to balance technical analysis with facts. The TA looks good, positive outlook. You could quite easily invest based on this chart right in front of you right now. But when you look at the facts, surely as an investor, it's raising so many red flags that you just stop to think, is this worth putting my money into? For me, no, I won't go near it. Now in a volatile market, you may get some swing trades on this and make some money. But as a long-term investment, please consider the points that I've raised so far. So if you're still with me at this point, what am I going to do? Well, I think I've made it pretty clear, but let's go through it anyway. So here we are, I've added mPhase Technologies to the tracker. You can see their ticker, you can see the exchange that they're on, the date I added it, and the price at the point of adding it. So if we start with the financials, I've rated them a 1. So why have I done that? Well, unless you skip to the end, there's some massive red flags throughout this. So if we start on the ratings with the financials, I've rated them 1. Why? The fact that since 1996, they've racked up debts of 227 million doesn't scream to me that they're being responsible with their money, or that they have the interests of shareholders at their heart. And when you add in the fact that they've got one customer for their revenue, it's not stable, it could fall over tomorrow and you'd be left holding the bags and your investment would be worth zero. In terms of growth, I've tried to be fair. Maybe they'll grow, I'm not sure. I mean, it's positive that I guess their software is being used somewhere out there. In terms of attractiveness, I've scored them a 3. To be fair to them, the sectors that they are invested in are attractive. So when you think battery tech, AI and e-learning, they're all good sectors and they're all growing sectors. My main caveat on that point would be though, that if you looked at the past, not many people have been interested in what they're offering. So therefore, I'd be begrudged to score any higher than a 3 at this point. So in terms of risk, I've scored it a massive 5. Why? First of all, financials. The financials are absolutely shocking. They're all over the place. $227 million of debt since the inception of this company. How is that sustainable? I'll tell you how it's sustainable. It's only sustainable at the cost of the shareholders. And that shareholder isn't the CEO, it's you. Secondly, I don't trust them. They've been extremely selective with the information they've chosen to present to you. It's fairly clear as well that no hedge funds trust them, no venture capitalists, no private equity firms, no one. Just the general public. Now I really hope that you have investigated this company before you've chosen to go buy. But I know a large majority of people won't have, and they'll have just done it because they were cheap. Just please be careful, because there is a risk that they could dilute the shares in the near future, and you don't want to be left holding those bags. And the third and final point why I've rated it a 5 is their crazy strategy. It isn't refined enough. Go after one or two things and be brilliant at that first and then diversify, not the other way around. Generally, diversification is a way to mitigate risk for big companies, and it's only done when you've reached a level that you can sustain it and take that capital and reinvest it. They're going the other way. And when you're already short on funding, why would you concentrate on 5 things and not just centralise it and focus on 1 or 2 and be absolutely brilliant at them? For me, it makes no sense. I don't get where they're going. And if I was an investor in this company, I would be worried. So for me, I've had to score an overall rating of 1. Financially risky, strategies all over the place. And thirdly, I just don't trust them. And that's a real big thing for me. I really look into the people behind the product. And I want to be able to know that you can trust them to do the right thing with your money. With our money. I don't trust these guys. And whilst this isn't financial advice, and you should always do your own due diligence, I do believe that the majority of the content in this video is fact-based. And therefore, all I ask is that I hope you consider these facts when making any investment decisions in the future with mPhase technologies. So like I said during this review, it would be easy for me just to do support videos, give you positive confirmation that the investment that you've made or decided to enact upon is absolutely fantastic and that everything's okay and that nothing could possibly go wrong because woo, battery technology, woo, AI. Well, that's not the case. You need to look a bit further, you need to look a bit deeper. If by chance the content that I have raised in this video does end up impacting the share price in the future, then hopefully that encourages you to subscribe and watch my future videos. I can't promise you I'll always give you buys, but I will give you information that hopefully you feel like you can trust. So all that's left to say is thank you for watching. I do really appreciate everyone who's subscribed so far. And all those people that have left comments as well. Whether they're good or bad, I've answered everything so far, and I'll continue to do so in the future. Thank you for watching, take care, and see you again next time.